It's the beginning of the year, and it's that time when we're coming up with resolutions. One of the top resolutions that people come up with is their finances. But how do you come up with a plan or goals that are attainable? And how do you also ensure that by the time we get to December, you have stuck to the plan? We talk to a financial guru coming up shortly. Our guest today is Julius Gituro, the Managing Director of Reliable Consultant Insurance Agency, a seasoned finance and insurance expert who has been committed and focused on providing finance and insurance solutions to families, business, and corporate clients since 1998. His career began with Britam, where he worked as a financial planning advisor for 4 years, after which he progressed to other renowned insurance companies including UAP Old Mutual, Metropolitan, Canon Assurance, and ICA Lion Group, where he diversified his portfolio. His vast experience has expanded his career, and he possesses the foundation, experience, and knowledge to offer unique finance solutions. Thank you, Julius Gituro, for joining us today. I'm wondering, it's the new year. Are people calling you? Is your phone off the hook with people coming up with new plans and wanting to invest? How is it?
Okay, thank you, Cynthia, for having me on the show. And it is a new year, yes, and my experience, even from previous years, people do set goals, and they do call us so that we can guide them on the new year and what kind of goals they're going to set. And basically, for the last 18 to 20 years, we have been doing this. We do what is called a need analysis. We sit down with our clients, show them the small steps they need to take to reach their long-term goals. So yes, we've just started the year, and I have several people who have called me because they would want to know a few things on what they can do to meet some of the goals they are setting this year. So yes, the people are calling us at this time. And
being a new year, people are optimistic. They have new plans. They're going to take a different direction in their lives. Do sometimes people come up with goals that are unrealistic and not attainable?
Yes, it happens. And everybody's dreaming. I am dreaming, you are dreaming. The people out there are dreaming, they have their goals. In
but
fact,
not all dreams are valid.
Very good, yeah, not all dreams are valid. Now, well, some people dream and they go into the new year. I will say most of the people go in with unrealistic goals. And why do I call them unrealistic? Is because I have set a goal. Maybe I want to buy a house, I want to buy a car, I want a big wedding, or anything that is in my realm of goals. But I don't plan. So the moment you don't plan, there is no execution plan, then your goal is definitely unrealistic. Because you cannot go or hit a target that you don't see. So yes, people have unrealistic goals, and our job is to guide them to make plans, get smart goals, and execute their plan, so that then the goals are realistic.
And how do you measure that? How can you tell this goal is unrealistic, you won't be able to meet it? How can you come up with, as you said, smart goals? How do you measure that?
Okay, I will take an example. Let's look at somebody who wants to lose weight. If I want to lose weight, and let's say I'm 120 kgs, and I want to lose maybe 40 or 50 kgs, then I come up and tell you, in 2 weeks' time, I will have lost 15 to 20 kgs. And it is very clear, even for a trainer, that this is not realistic. So for you to set a goal that is realistic and attainable and measurable, you must look at the time that is required and what you need to do for you to attain that goal.
Yes.
You see, or even if it's, let's look at also saving money. Let's say I want to save money for 1 year, maybe I want to raise 10 million, but I have to look at my income. Well, how many sources of income do I have? What is the available income? What will I do every month, every week, and every month so that I can attain that goal? If my income does not allow me to save so much, then I may not be able to reach the 10 million mark, but I could save 1 million or 1.5 million. So one has to zero in on what it is. You have to be reasonable with your goal, And it must also make sense to you. Okay? Otherwise, if you do not meet that goal, then it's devastating.
Yeah, you've just mentioned income, and unfortunately, we have seen a lot of people lose their income because of COVID-19 last year. And as they are coming into a new year, how do you plan financially for yourself, even when you're not earning an income?
Yes, it has happened, and we've seen people lose their income because of COVID, and this was something that we never expected, you know. And I think COVID has also come with its lessons. Apart from the income that you are receiving from maybe from your employer, you must look for alternative sources of income. You know, you have to look for alternative sources of income. But right now, since you may not have the capability because you're not earning, I suggest that one has to look for a plan B. If you have a property somewhere, if there's something you can dispose to raise income so that you can start a business or anything, then that is the direction you have to go. Otherwise, it is now clear that we need several sources of income so that in case a pandemic was to strike again or anything that is unforeseen, then you would know how to survive, because the survival became impossible to some people. Yeah. And
this coming year, where we still have COVID-19, we haven't even recovered, but we know that it's an election year. We're going to have it in August. And a lot of times, even after an election, the economy is very slow. How should we then plan for this year? One thing that has happened, let me mention this. When we are going to election, you find that, one, people don't want to invest. Investors are withdrawing themselves. If this is the share market, the share is coming down because people are selling off. But the best time to make an investment is even in the election year, where the shares are coming down, the investors are scared, then you could put in your investment. But also, an election year is still an opportunity to make money, build businesses. And also, there are many companies that make a kill during elections. So one has to be brighter, think outside the box, and see what do I need to do to tap into these services and make money, build my company, you know. Yeah. There are a lot of opportunities. Printing T-shirts. Very good, very good. Yes. And posters and so on. Or branding is big time. Yes, branding is quite big. So yeah, it's true. A lot of times some things look like challenges, but they're actually opportunities. But now looking at, as people are planning for the year financially, a lot of times people get discouraged because they feel like I had plans last year in January, but I lost those plans. I was lagging behind by mid-year. What happens when you lag behind? Okay, one, lagging behind is normal. Yes. Let's also agree it's a good thing you said that. Lagging behind is normal. Well, it's comfort. Yeah, lagging behind is normal. Yes. Don't beat yourself. Yes. You have lagged behind. First, forgive yourself. You know, forgive yourself. It didn't happen. I had this time frame. I was to meet this goal. It didn't work. Then ask yourself, why? What happened? Why did I not meet this goal? So when these questions are clear in your mind, yeah, then you now go down again and set new goals. Set new goals. Don't wait for the new year. Like I say, because it's mid-year, I'm going to wait until 2023, then I set new goals. No, start immediately. And then move forward with your new goals. But be very clear that if you don't plan those goals, and if you don't execute them in a manner that will produce results, then you may lag behind again. So lagging behind is normal. You just set new goals and move forward. Or even sometimes when another pandemic, say for example, happens, what it just calls for is for replanning. Very good, very good, very good. But as you work with some of your clients, what have you noticed are the reasons for people midway to lag behind? I think one, goals must be advertised. If you set goals, and maybe you're in a family setup, let your husband know, let your children know, let them be your support system. If it is at work, let your boss know this is my goal, let him support you. Or if it is with your friend, they set goals, you set goals, and put something at stake.
But some people set goals and then it becomes a secret.
Because you're afraid that it might backfire.
Yes, I agree.
Yeah.
So when you're afraid, then you don't execute your goal. You see? So you must advertise your goals. Yeah.
I think that helps because now you're even more accountable. When you're about to sleep, you have people you have to explain to what happened.
Yes.
Yeah. We're going to take a short break. But before we take the break, I just want you to write down some of your goals. And I liked what he said, that you have to make sure that you're very clear about your goals. And I'll be sharing something about writing your goals. And after the break, we'll be finding out more what are the investment opportunities for you this year. We'll make it a little bit more practical for you. Welcome back. Before the break, we were talking to Julius Gituro, who was telling us about how to come up with your financial goals and how to stick to those plans. Now, let's find out a little bit more about the opportunities that we have this year. And we were talking about the challenges that we're going to have this year. COVID-19 is still with us, and also it's an election year. But what opportunities are there, long-term and also short-term?
Investment opportunities exist every year. Whether it's an election year or not an election year, we have investment opportunities. It all zeroes down to, are you investing as an individual or as a corporate? And are you looking at short-term goals or long-term goals? Now, you don't have to have so much money to be an investor. Sometimes you could start small and grow your investment slowly by slowly. Now, most of the people today look at real estate, where they buy land, property, and all that. Looks like it's lucrative. And they do invest in that area. I'm not saying it's a bad area, but what I would like to say is, in the insurance industry, with insurance companies, there are very many funds that have been regulated by capital markets authorities. They fall under unit trusts, where you find the money market, equity fund, growth funds. You need to get a good financial advisor to sit down, first do a need analysis, so that somebody doesn't just say, you need to do this. No, they must look at your current situation. Where are you? And where do you want to go in the next 5 years, 10 years, 15 years? Then they recommend where you could start. Which fund can you take out? So there are investment opportunities, they exist. Wealth management. Some people have a lot of money. We have funds that are managed by fund managers, where you manage your wealth and you get returns. So the money can work for you as you sleep. But if you don't have that kind of money, there are still those funds that you can start with, slowly by slowly grow your funds. So you cannot say that today, because I have 10,000, I cannot start investing. Or you have 5,000, you cannot start investing. So the investment funds are there. Or if you want to start a business, you also need to get to like-minded people who have been in that business, talk to them, find out what the challenges are, what you need to do to start this business, and you jump in.
I'm smiling because you've said fund manager, and that's something a lot of times when people are investing, they feel like that's an extra cost, or I have to share my business with someone. Convince us on the importance of actually having a fund manager.
The importance of having a fund manager. We're going to look at somebody who does not have a fund manager and the person with a fund manager. If you don't have a fund manager, that means you will walk into the stock market, buy your own shares.
I'll read in the newspaper and I can tell the mood.
That's the point. And then
go invest.
And you don't have time to watch the market. You don't have time to track your investments. You don't have time to know whether you should sell or buy, because you're busy doing other things. So when a fund manager is involved, that is their job. They are the professionals in that area. They choose where to invest your money. They have an ear to the ground. They know which funds are doing well, which are not doing well, where to sell and where to buy. So in case there's a fund that is not doing well, you will not feel the volatility because it is pulled together. But as an individual, you will feel the shocks in case a fund was. I've had people say, oh, my share came down, it's worth nothing. That is what I'm talking about. But when you are the fund is pulled together with a fund manager, then you can sleep safely knowing that somebody is watching the market for you.
Yes.
Yeah.
Take us through the steps of starting an investment fund, and what are some of the requirements, and even how much does it cost?
Okay, the steps of opening a fund, as I said first, you need a financial advisor, somebody who will take you through all the funds that are available, and then they will look at your goals, short-term and long-term goals. Then you find that today it's cheaper to come into any investment than it was 20 years ago, 15 years ago, because at one point we only required, you could not invest without $500,000 to the same funds I'm talking about today. But today with 1,000 shillings, you can open a fund, a money market fund, an equity fund, a growth fund, and you start investment. The investment company will ask for a copy of your ID, a copy of your PIN, bank details, so that when they're sending the money, they can send to your account, and then you just deposit the money straight into the account, and you are already an investor. Then you can invest as and when. It's not like a monthly thing. You can do, if you have lump sum, you put lump sum, take a break, come tomorrow, put some more money. Yeah, so it becomes gradual. It's flexible.
Yeah, I like it. It's flexible. It's a bit open. You can start with almost any amount. It's open for everyone. Let's talk about estate protection and why is it so important. It's a topic that, especially in Africa, we don't like talking about.
Yes. Okay, one has to understand the importance of estate protection for you to respect estate protection. If today you are planning to invest and you put out an investment, then something happens to you. Assuming maybe you fall sick, there's a lot of money that is required, maybe you don't even have a medical cover, your estate is the one that comes to rescue you. See what I'm saying? Your estate will come to rescue you. So, meaning that you could have an estate worth 50 million, 100 million, but it is being depleted because your health is deteriorating. Now, how do I protect my estate? By taking a life cover. When you take a life cover, some people mix life cover with investment. Don't mix life cover with investment. Separate the two. Just go request for a life cover and look at your estate. If I'm worth 100 or 200 million, take out a 50 million cover or a 100 million cover, and they are cheap. You can choose to take for the rest of your life, which is called whole life, or for that certain term. You might say, because I'm taking care of my children, I need a life cover only for the next 15 years. After 15 years, anything happens to me, I'm okay. If my estate is depleted, I'm fine. But the estate protection is the #1 place to look when you're doing financial planning, because it protects your investment.
Mm-hmm. Yeah. And what age, even as we talk about investment, what age is the right age? A lot of times people feel like, they're too young and they don't have the money to start, or others feel like it's already too late. I mean, my 50s, 60s, it's too late.
Okay, one, age is a good thing to consider when you're investing. And the advice to our generation, young generation now, is start investing when you're young. A person who starts investing at 21 is it's not the same as a person who starts investing the same investment at age 41 or 51. This is where you look at who is a smart investor and a wise investor. So if you start investing young, that means your compounding interest will be higher and higher and higher with time. So I know for sure that if you are past age 50 or 60, an investment might not really work for you. Yes. What you need is a medical cover. Anybody who's going for retirement, the first thing they need with them is a medical cover in their pocket, because that is where your investment is. But when you are young, look for available options, talk to financial advisors, and start investing immediately.
Yeah, and now you can invest within 1,000.
Yes, there are, and there are many, many funds now you can choose from, depending on where you want to go. What are your goals? Short-term goals, because the young people want short-term goals first. We've discovered that they don't want long-term. So we have funds that work for them short-term.
Yeah, and even as you're talking about young people, tell them the advantage, because they have age on their side, of compound interest and the magic of, I call it the magic of compound interest.
You see, compound interest is derived and managed with what you call time. You have to put time on compound interest. If compound interest does not have time, then you cannot make money. But today, if you put 10,000 and you continue saving every month 10,000 for the next 20, 25 years, and you look at every year, the compounding interest, by the time you're getting to 20 years, you have made a lot more money than you would ever imagine. But if you waste your time and you come in at age 40 and you want to achieve what you could have achieved when you were at age 20, then you have to put double the money. Because now you're looking at inflation, and also for you to get to your goal, if I had asked you for 10,000, now I'll be asking you for 80,000. So that we can meet the same goal that you would have met if you were giving me 10,000 at age 20.
Yes. Yeah. And if I'm looking for a fund manager, what are some of the things that I need to look out for?
The good thing is that we have a regulatory body called Capital Markets Authority. The Capital Markets Authority will avail for you information of the companies that are authorized to transact on different funds. Because I'm not even mentioning names, I've seen people who have burned their fingers because some people have set up funds, but they are not regulated by Capital Markets Authority. So the Capital Markets Authority has the companies that they have regulated. And these same companies, you will find them, same fund managers are working for insurance companies. So you look for insurance companies, several of them, there are so many of them, do your homework and find out if they are keeping their promise.
As we close, what advice would you give our viewer for this year when it comes to investment?
Okay, my advice to our viewers when it comes to investment for this year is that, one, you have to be a risk taker. Don't think too much about any investment that you want to take on. Jump in, take the risk. As long as you are clear that there is integrity in that investment, not those quick get rich quick schemes, because Kenyans are also have they also love those ones with pyramid schemes where you put money, you are promised so much money. There is no get rich quick investments. You have to give investments time. So you look at your goals and start investment as early as now. Look for financial advisors, sit with them, let them create a plan for you so that you can start early, and tomorrow you will have built a future for yourself. Because what you save, you can save for land, wedding, buying a car, buying a home, but have the culture of investment. The culture of investment is what pays.
Thank you very much, Julius, for joining us today. Remember, start early. I'm having this conversation because I had a 23-year-old writing and asking about how to invest. And as you had Julius saying, you can start with as little as 1,000 bob. Have you written down your financial goals? Well, that is the first step to having a successful financial year this year. See you next time.